If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you.
Hey man, how's it going?
Going well. I have power at home now. I'm back in a heated house. Much better than last week.
Every one of my friends who went more than a week without power in Nashville has told me they have power now. So that I'm so glad this nightmare is coming to an end for the city. Just awful. And then also I saw the weather forecast, and it looks like next week is going to be much better. Temperatures in the 60s a few days and things like that. So yeah. I don't know if you knew that, but
I did not know that. It's good.
Yeah. So it seems like we're coming to the end of this nightmare.
I take heat and electricity for granted until I don't have it. I'm like, now I was so happy to get it back Monday night.
Yeah, man. And, I think we're heading into the fallout. I have found it very interesting that there was this, prolonged power outage in what I would consider, a pretty major city. I mean, Nashville just got announced that we're going to host we're going to host soccer matches for the 2028 Olympics. I mean, we're a legitimate city in America now. And the city was largely without power from, over 100,000 houses for over a week, right? And I find it amazing that that's going on at the same time that we're talking about, Elon Musk's, data centers using more power than all of San Francisco, right? It's like the juxtaposition of where we're going with AI, and we're getting ready to talk about the impact of AI kind of throughout the, today's show. That being juxtaposed against the ability to deliver electricity for the citizens of one of the most important cities in America. It's a hard thing to square. It's a hard thing to square.
Yeah, and it's basic blocking and tackling. Like when I don't know how many trees, thousands of trees fall in pretty small geographical area with power lines that are not buried. It doesn't. They had to undo a whole bunch of, chaos. I think it's really a planning thing, but the city has a lot of things they're planning for. So the tree maintenance is probably not high enough.
Yeah, and look, I think this kind of situation does relate to healthcare, creates healthcare burdens on the system. Certainly. During a time of the year where you're going to have more and more viruses flying around, you know what I mean? I mean, I wasn't even there and I got the flu, right? So, I'm sure people had power outages and also were dealing with illnesses and things like that. And then they're having to shack up with other people. And, it's just all sorts of downstream things, from this kind of incident that you just don't even think about until it happens. So, well, look, I'm glad you got power and, and we can move forward, with some level of normalcy. All right. Well, look, man, we have 8 different stories we're going to cover today, so a lot to dig into. Let's get going. Let's start with the tech stock drop. Starting with 2 stories in the Wall Street Journal. It's all related to AI, right? The headline is the markets have finally sort of recognized that AI is going to be an incredibly disruptive force to software as we knew it, and the growth patterns that we have grown accustomed to with software over the course of the last couple of decades. And, sort of a panic repricing happened, and it was the worst 2-day drop in Nasdaq in a while, almost in a year. So it's going to be interesting to see whether or not this time it sticks or not. But what was your read from that fallout? We invest in a lot of software, and what happens in the public markets impacts the private market.
Yeah, no question. I mean, I think software is going through every 25 years or so, there's a new form factor. I mean, the internet changed everything. I think mobile was impactful, but a lot of software as a service businesses were able to navigate that and add on a mobile app. And so that wasn't as difficult. AI is a whole different paradigm, and it's going to be really difficult, I think, for software and service business to grow and have the same profitability that they've had previously.
Yeah, I mean, as these AI models get better and better at one-shotting tools, right?
Right.
I think it certainly eats away at that small to medium-sized business part of the funnel, right? Now, the enterprise is different. The enterprise has different concerns, compliance, scale, identity management, a lot of things that you're simply not going to one-shot that kind of system. And the second story here from the Wall Street Journal that bookends this overall scenario, the headline is AI won't kill the software business, just its growth story. Jensen Huang was with Mark Benioff at a conference, and it was Dreamforce, and they were talking about the fact that AI is not going to kill the software business, and the market is mispricing this. And I agree with that. Generally speaking, this feels like a panic sell, but I think we both have to admit, between the massive layoffs that are happening, and Challenger just released a report that showed that we just had an ungodly number of layoffs in the last 30 days, and they're white collar layoffs for the most part, right? So that's software seats going away. And generally speaking, SaaS companies are not going to be able to get away with constantly increasing prices when the AI industry is doing the exact opposite, right? I mean, we signed up for Claude Teams in December, and already they sent us an email telling us that they were dropping the price, not increasing the price. Right. And so the AI models are getting consistently getting better. The releases are happening at a breakneck pace, and they are decreasing the cost to the end user at the same time. That is not a value proposition that the software industry has really ever had.
Yeah, that's right. So the enterprise is going to hold on to their systems of record. I agree with that. And at the same time, there's going to be fewer people that they're having to pay seats for because they're going to have fewer employees, in my opinion. Then the other thing I'll mention is, I agree that these large, complex software platforms are not something that quickly you can just one-shot with a prompt. And at the same time, Cursor, built a new browser. Now, it was done over a week, but it was one prompt, and then the AI system worked for a week on it, something like 300,000 lines of code or some significant amount of code. The next thing they're doing is trying to so that was like a, sort of another version of Chromium-like browser. It's not as feature-rich. The next thing I think I've heard is that they're trying to clone or do a version of Excel just to prove that they can do it. And like I say, these things are not going to replace the systems of record, but they're going to be really hard to negotiate pricing around, because if I can do it with Claude, I'm not going to pay as much for everything that I would used to pay for.
Yeah, no, I think that's exactly right. So I like the way that you talked about every 20, 25 years, all of software sort of goes through this big, phase change. It used to be on floppy disks, and it was on CD-ROMs, right? And then we, Mark Benioff was one of the big people to usher in the, no software with the Ghostbuster symbol, right? We moved into the cloud. And yeah, I mean, I think you're right. I think we're going to see, can these companies leverage their brand, leverage their customer relationships, leverage the distribution, but transform their business models. And I think, one of the greatest examples we've ever had of that is Netflix, right? Netflix literally used to sort of, send out and retrieve DVDs in the mail. And now, they're the number one streaming platform in North America, at least. And they are, there's no CD-ROMs to be found anywhere. There's no DVDs. It's entirely a streaming business, but they leverage that brand promise of leveraging the internet to deliver entertainment value to the end consumer. And so I think, we are likely to undergo this large scale transition where the dominant incumbent brands are just going to have to figure out how to make that transition. And here's one of the things that I think is going to be really interesting is the public markets just may not be a safe place to do that.
Yes.
many of these companies may have to just go private in order to make these business model transformations.
Yeah, I mean, two examples that come to mind. I think Microsoft really struggled in the internet age, and then they came back. But there was probably a decade of really challenging times. And then more recently, Google, I think, was very threatened. They were the first one that obviously was threatened by AI because of search.
Yes.
And because they still are founder-led-ish, they have cannibalized their own search business and really evolved to where they're, I think, the leader, one of the top 5 companies in AI now. But that takes a lot of courage, and it helps that they have such incredible cash flow that they can do that. Not many companies can do that.
No, and they also had the raw materials. I mean, the thing about Google was, I think they were caught a little flat-footed by Sam Altman's audacity more than anything, right? Yeah. But the core technology came from them, right? So what they had to do was they had to shift their attitude more than anything, right? I mean, they had the cloud, they had the chips, they had the infrastructure, they had the models. It was more a shift in behavior and attitude more than anything.
Yeah.
And I think that's going to be another important aspect, is you're going to have to look around at these companies and say, what is their real DNA? What are they really made of underneath the hood? And can they navigate this transition well?
Yeah. And it's the reason VC exists. I think it's very hard to do that. Some will do it, but it's going to be difficult.
Agree. All right, let's move to a couple of VC stories. Chamber gets a $60 million jolt to power value-based care for cardiology practices. This is a Firece company. This is an A round, and they're providing cardiologists with a tech solution along with infrastructure for administrative and care team support, focused on VBC. VBC seems to be getting yet another tailwind behind it, and it seems to a degree be a realization that, with the direction that the One Big Beautiful Bill is taking everything in, fee for service is not going to be a long-term viable model to base your entire provider business on. And so more and more folks are realizing they're going to have to reapproach VBC. And I think also, the reality is that CMS is driving a VBC, agenda, even though they're not necessarily calling it value-based care, right? But they are talking about, focusing on outcomes and leveraging technology. And I think if you can squint at those two things, it kind of reads like value-based care.
Yeah, I think that's right. And I also think we're seeing every week, sort of the verticalization of disease management, right? So this company is going to focus on cardiac care pretty much exclusively, and they're not going to be geographically bound. And that's almost the inverse of what traditionally we've thought of a health system or provider group, where you'd have a health system that took care of like a region of the country, and then they started to grow and expanded where they're multi-region. But having that like vertical focus around a particular specialty and then nationwide reach is pretty interesting. And you can start getting best practices and then take advantage of value-based care, or it's whatever comes after value-based care that is sort of at risk. So I think it's sort of a trend.
And the second story here is that women's health clinic Midi Health closes a $100 million Series D as it aims to scale a national healthcare company. So now officially hitting unicorn status. The backers of this round, Foresight Capital, Serena Ventures, GV has been in for a while, Emerson Collective, McKesson Ventures, Advanced Venture Partners, a who's who around the table. And Midi Health has really just been able to fire on all cylinders and continue to get great backing from great blue chip firms. So, what are your thoughts on where this ultimately lands? I mean, do you think that this is, it's a great brand. It continues to roll on with rounds after rounds. It's delivering services. And so, I think that makes the margin part of it pretty difficult. But do you think this is ultimately positioning it for a sale to an Amazon or something like that?
Yeah, I don't know. This is an interesting one because women's health really should not be a vertical specialty. I mean, it's half the population. But it is because it's been so underappreciated.
Yeah.
And Midi has really done a good job growing into this position where they treat 25,000 patients a week. In all 50 states, they have 500 plus providers. So they're getting pretty decent scale across the country. And yeah, maybe they'll sell to a big group. They also might, continue to be independent. I think that, this brand positioning is I think really strong. Cardiac care is also huge, but women's health, it just has a lot of opportunity in it, I think.
Agree. Yeah, completely agree with that. All right, let's roll into a discussion on policy. I think that the overarching theme of the 4 stories we're going to run through here is that even though there's so much focus on the Trump administration's geopolitical agendas, they are still very, very active in healthcare, right? I mean, and some of this is tied to addressing the government shutdown and all the funding that kind of gets released as a result of the House being able to avert that. But there are also, some other very specific things, and they all tie back to the core, campaign pillars that Trump and RFK Jr. brought to the table as it pertains to, where they want to take healthcare in America. So I'm going to run through these pretty quickly, and then, Vic would love your thoughts on it. Let's start with the first one. TrumpRx is set to go live on Thursday. So this is, the White House is effectively their version of Mark Cuban's Cost Plus Drugs, except for it's not a direct transactional site. It's more of a navigator site. It will help American citizens find the best path to buy directly from pharmaceutical manufacturers and, purportedly save money and being able to access lower drug prices. So this is opening competition. It's price transparency. These are all, kind of core pillars for the Trump administration with healthcare. The second overall story from Firece Healthcare about the $1.2 trillion spending package that funds HHS. And the headlines here, PBM reforms. This has been clearly a focus for the Trump administration. Telehealth and hospital at home measures. So continuing to leverage technology and distribute and decentralize healthcare and push it out to the edges. This is obviously a good thing for rural health, but I think it's also generally going to be a good thing for communities all around the country. And then some scrutiny around Medicare, right? Some scrutiny around Medicare Advantages, leveraging of ghost networks, and, really digging in and making sure that there's audits done on those provider lists, so that these ghost networks are not, inflating the purported value of Medicare Advantage plans. The third one is a brief from Healthcare Dive saying that 1/4 of Medicaid doctors don't actually treat Medicaid patients. This was published by Health Affairs. And so, again, more scrutiny on government spending, fraud, waste, and abuse, the whole ghost provider thing. So more coverage there. And then finally, HHS is planning to invest $100 million to support addiction recovery and address homelessness. And this story, on the surface, you just see $100 million addiction recovery. That's awesome. But what's really happening here is a sea change in the approach and the philosophy around addiction. Fundamentally, this is a move away from harm reduction, which was a staple of the Biden administration. And even though harm reduction has multiple studies showing that it has been very, very effective in reducing infections, reducing overdoses, and increasing access to treatment. Philosophically, it does not align with MAHA. It does not align with the Trump administration. And so this is moving away from the harm reduction methodology. And it's actually a pretty strong move in the direction of integrating faith-based organizations into addiction care. And here's just a quote from the article here. RFK Jr. says, this is a chronic disease, but above all else, it's a spiritual disease. And so I think we can expect some meaningful percentage of this $100 million to go to faith-based organizations that are now going to be recruited to be on the front lines of addressing addiction recovery and homelessness. So quick rundown of policy notes from this week. Vic, what's your take on it?
Yeah, sort of two things pop to mind. One is the pace of policy change continues to just be really fast. These 4 all came out this week. And as you say, the Trump administration has lots of other things going on as well. And they are still full on trying to do what they can to reform healthcare in the way that you mentioned. So they campaigned on, and there certainly is a positive side to transparency, competition, kind of technology empowerment, and maybe even individual empowerment, and then kind of removing fraud, waste, and abuse. Those are all very positive things, by themselves, but they all have a downside, right? Like, so competition is great, but it also may not include every person, and they may, competitive markets might serve more profitable patients, and at least for me, it would be important to take care of all Americans. And the harm reduction is sort of part and parcel with sort of moving us towards more active, more faith-based. I understand that, but I also think there's a downside to that. The harm reduction, I think there's a lot of lives saved, a lot of follow-on problems that happened because we didn't offer needles and other tools to reduce harm. And so it doesn't seem smart to remove those things. So I agree with what you're saying. I think they are continuing on what they promised in the campaign, which makes sense. And it's spun very positive. But there's another side to all these stories that I think in healthcare, we need to take care of the people that are not included in the main, because it's the right thing to do. And I'm not sure that the highly competitive, tech-enabled, transparent, no fraud mandate will always have that sort of full coverage safety net that healthcare at least used to rely on.
Yeah, I mean, look, I think my big takeaway is that the Trump administration has taken full advantage of the 2 legislative sessions in which they had the full stack coverage from the House, Senate, and the White House. And, last year, prior to this time, I mean, it wasn't until July when the One Big Beautiful Bill rolled out, but that was a massive, massive change to American healthcare policy that is going to reverberate for the next 10 years, right? I mean, I would say, yeah, just like the Affordable Care Act did, this is similarly, One Big Beautiful Act, One Big Beautiful Bill is going to, reverberate for a decade, right? All the changes around provider taxes and just the impacts are going to be significant. And they understand the midterms are ahead, and they understand that the outcomes of the midterms are unclear, and so they are moving very aggressively in this legislative session as well, right?
Right.
And they're kind of, it seems to me that they're trying to finish the job in the first half of his term. They're trying to finish the job because they know there's a chance that next year this time they won't be able to move this efficiently. And so they're getting many, 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 many things in place. And so, it's at least impressive, the rate of change and the amount that they're able to push through, leveraging this moment in time that they have politically. It's quite astounding. It's quite astounding.
Yeah, no question. I mean, to me, that was the big change from Trump 1 to Trump 2. Like, really planning to hit the ground running in the first year and continue so that all of the legislative changes could happen in the first 2 years. And the second part, which was required to deliver that, is selecting cabinet members and then even the next tier down to run all these agencies, but HHS certainly, where the leaders can tell their own story. They don't need Trump. And Kennedy is out there, but so is Dr. Oz. I mean, they all are able to sort of tell their own story and send a message pretty strongly. And they have the pulpit. They are in the White House. That administration's run the executive branch. And I think that's a difference from the first Trump administration, is that he has found people that have enough strength to be able to go off on their own, but they're also aligned with where he wants to take the country, which is a pretty powerful, whether you like it or not, pretty effective, powerful combination.
Agree. All right, let's move to the payer world and let's focus on one company, Cigna. We've talked a lot over the course of the last month about United, Humana, Elevance, even. We've talked a lot about them.
Yeah.
But Cigna has been able to kind of fly below the radar. And I think we would both credit this to, their sell-off of their government business, right? And just being totally clean and focused now on a commercial book of business. And so two stories that we have here related to Cigna. The first is that they had their Q4 financial results and it was better than expected. And the one thing I want to kind of call out, they reported 2.1 billion in adjusted income, compared with 1.8 billion from the fourth quarter of 2024. Look, when we were reviewing the other firms, they also had, year over year increases in their fourth quarter, top line results. But I think the key thing here is that their medical care ratio was 88%. So they were able to keep it flat. While that's not like the most stellar MLR you could possibly have, everybody else is 90 plus, right? And so, steering clear of that government book of business is just really allowing them to focus and execute with their employers. And I think it's put them in an incredibly, solid position. And I think that they are, we should look for them to be an outperformer, I think, throughout 2026, simply because they're not going to have to deal with all the headwinds of adjusting around Medicare and Medicaid.
Yeah, no question. Cordani, who's the CEO, he really timed things almost perfectly to sell their Medicare Advantage plans, which had been really a huge value driver for them for maybe a decade.
Yeah, a long time.
At a time when they got a really good price for it, and then they're out of that business right before it started getting so much pressure. It was great, and they're sort of benefiting from it now. And the one issue they also cleared up this week. So we maybe move to the next story.
Yeah. No, I think that's exactly right. So the second story here is that, Cigna's PBM, Express Scripts, reached a settlement with the FTC. And, if you read the article, effectively, they just, the lawsuit was about artificially inflating insulin drug prices. And, when you look at the outcome of what they did, they basically complied with all of the big reforms that the Trump administration is trying to put in place in the PBM space. And so I think with one foul swoop, they both have gotten out of the crosshairs with regard to their PBM. I think their PBM is now going to be a good actor. It's going to collaborate well with TrumpRx as it rolls out, et cetera, et cetera. And they're also not in the government paid business, right? So again, good foresight, good strategic moves in advance of what has been, an unbelievable 180 in terms of, tailwinds turning into headwinds overall for the managed care industry. And it looks like they are about to thread the needle. All right, let's move to a rundown of the pharma space. We've got 6 companies, and we're going to split them in half into winners and losers. So starting with the winners, Eli Lilly, profit rises as weight loss drugs demand surges. The revenue rose 43% to $19.29 billion. AbbVie revenue rises on immunology growth. Their Crohn's disease drugs, Skyrizi and Rinvoq, are doing exceptionally well. Revenue climbed 18% to $2.96 billion in the neuroscience business. And then GSK also had a good, year where their operating profit grew between 7 to 9%. And so we've got 3 winners here: Eli Lilly, AbbVie, and GSK. I think on the Eli Lilly side, just incredible execution in the GLP-1 space, adjusting to where all the headwinds were coming around insulin, doing that very, very well, and now being sort of a leader in innovation. AbbVie cornering the market around all things immunology, and that space, unfortunately, continues to be a really big going concern for the American public, and so they're doing very well there. And GSK's focus on specialty medicines and a focus on oncology is paying out for them. So those are sort of 3 winners, and now let's go to 3 losers. So we'll start with Novo Nordisk, and their sales dropped so far in 2026. The sales could decline as much as 13%. Vic, the only thing I can come up with here is that this is just a story of one company getting fully out executed by another company. I think they both launched in the market. Novo Nordisk actually had like the big brand coming out. I mean, Wegovy, yes, but Ozempic that's their brand, right? And it's just been astounding to watch how Novo Nordisk has stumbled when they were an early leader in the GLP-1, movement. Merck, I would say, on the losing side of things, their revenue did rise 16.4 billion in the fourth quarter with their oncology business, but they're having slower earnings growth, and it's because they're really rebooting their pipeline, right? So they have some legacy vaccine business that they have to sort of deal with because vaccines are obviously facing so many headwinds in America at the moment. And generally speaking, they have to restock the shelf. They have to get a new set of assets in, and so they're a little bit behind. But Pfizer, really, really, really just struggling continuously. Cannot get a win under their belt from an acquisition perspective, continues to depend too much on COVID-19 drugs, and their sales fell to 17.56 billion in the fourth quarter. So a tale of two worlds, winners and losers. Organizations that are executing incredibly well are in spaces from an asset-based perspective that are doing very, very well versus those that are really, really struggling. What's your overall read on it?
Yeah, I think I agree with that. What I'm seeing is that the way to win in pharma used to be, hire a huge sales force, spend a bunch of money on TV ads, and sort of drive your brands to get adoption. And everyone kind of had similar, yes, there were differences, but similar drugs that they could push. It was more of an execution around marketing. And at least I'm seeing the product differentiation and then execution on sort of how you deliver that product through the different channels is really a differentiator now. There are three companies, Eli Lilly, AbbVie, and GSK, that have figured out how to create better products and really do a great job executing. And then we have Novo, Merck, and Pfizer. That Novo has good products, but they have not executed well. They have problems at the board level, management level. They have problems everywhere operationally. And then Merck and Pfizer just don't have the product lines right now. They don't have the products that are really differentiated right now.
Agree. Yeah, so it's going to be interesting to see whether or not, Pfizer and Novo in particular. Merck, I'm not so worried about. I feel like the rising revenue is a good sign. They actually did some good deal making in 2025. So to me, it's more of a reboot for them. But Pfizer and Novo, I mean, they just continue to stumble, and leadership changes don't seem to sort of be the answer. So it's a real question what the future for both these organizations really is. But Eli Lilly and AbbVie, unbelievable performance, and those are stocks that if you're into investing in pharma, this is not financial advice, but you got to take those two seriously. All right, I'm going to turn it over to you, Vic, for this general story on what's happening with nursing in America. We cover this from time to time, largely around the strikes that pop up, and they pop up all over the country. They're not just in New York or even on the West Coast. They're all over the country. But this New York Times story is really digging into kind of the durable challenges that nurses are facing. And a lot of it seems to, have spiked around COVID-19 and the change in sentiment around healthcare workers. But it's become, unfortunately, a violent environment for nurses. So I'll turn it over to you to kind of cover this set of stories.
Yeah. So the first story is an opinion piece. I want to start with that, but it's in the New York Times. A nurse at Mount Sinai who works at Mount Sinai, but then their entire family are nurses too. So brother, uncle are all nurses there. And they're just describing that from the last strike and negotiated settlement, there are rules that Mount Sinai has to staff a certain percentage of nurses to patients, but they have not complied with that. And so this is trying to position the strike, not really about a money grab, although they want to get paid fairly. It's more of the ratio of nurses to patients so that their day-to-day work is safe and they can actually deliver care. And I think the reason to bring it up is I think that is a huge problem. It makes the actual delivery of care to the patients lower quality. It makes the experience of working really difficult for the nurses and other healthcare professionals. And unfortunately, I don't really see a good solution for it, but I wanted to sort of air it here and sort of talk through it. Medscape also published more of a research piece talking about how the technology that has come to our health systems, which has been, largely helpful. There's some things about EHRs that aren't great, but in general, it's better than paper. But it's put a lot more pressure on nurses and caused what's called digital compression fatigue. It's just, it's just harder to interact with your computer keying in things all day. And so I was struggling with this story because I feel for especially the op-ed. She talks about it's really hard environment. None of us would want to work in that environment. But what do we do from here? And I found a Wolters Kluwer article this week as well, talking about what you can do as a nurse leader or a health system leader, and they actually have 5 actionable steps to build what they call a culture of wellness. And so maybe this is a path forward, but the things that I'm going to state, they're easy for me to say. They're hard to implement in a system like Mount Sinai. But the leaders should shape the daily experience of work. So nurse leaders need to work on how the team communicates, make sure that people feel safe asking for help. I think a lot of people are trying for that. Wellness starts at the top. Leaders should model self-care and create space for honest conversations. Environments matter more than individual effort. So, individual wellness doesn't flourish if you're sort of not encouraging it in the environment. Listening to the nurses is really where it has to start. And again, I think a lot of leaders know that, but it's hard to really do that day to day in the stress of delivering care. Then healthy behaviors have to be sort of what's expected. So it should not be expected that any nurse skips their meal or works extra hours. They should be staffed in a way they can have their normal break in order to be able to deliver care when they're working in the right way. And so this just seems like a real conundrum for us that our nurses are going on strike or speaking out, writing op-eds, and it's a real issue, been studied lots of times.
Yep.
And the answers seem right, but they're also hard to implement. It's cultural change.
Yeah. Yeah. Well, first of all, thanks for bundling these 3 stories together. I think whenever we talk about the nursing strikes, we talk a lot about compensation, and we don't talk quite as much about quality of life, that the nurses are experiencing. In that opinion piece, there are 2 words that I used to see all the time when we would constantly talk about physician burnout, in quotes, which are moral injury. And nurses are just so incredibly important to the delivery of care in America, and I think are going to be even more important as our aging population moves more and more into that very expensive, high need, window of their life. And, we don't have a great environment for them, right? Like they're not compensated well enough. The balance of engaging with people versus engaging with technology, it isn't great. And the rise of violence in the workplace is wholly unacceptable. Like, full stop, right? It's just wholly unacceptable. And so I think that it's a pretty gnarly challenge. And the 5 points that you brought up here from this Wolters Kluwer, article, as you said, they sound nice, but, when do you get the bandwidth to implement these things? And, what's the reality of hospitals being able to do this in the face of the P&L pressures that they're going to experience, once the provider tax, drawdowns start really coming into effect in 2027 and beyond, right? I think that it's one of those situations that unfortunately it's structural and it's going to get worse before it gets better. And it may even take, some serious, I think we started this whole thing talking about nurses striking, right? And it may take a real breakdown for everyone to realize we're going to have to recalibrate this because it's not a story that makes it into mainstream America enough.
Yeah, definitely. And nurses in general don't like to strike because they really care for the patients. And so them going on an extended strike and really affecting patient care, which is what you'd have to do to get the attention and drive the reimbursement change, that's hard to get a group of nurses who came into the business as a calling to help people. Yeah. And it's just hard to actually hold. It's not like a auto workers or dock workers strike where it's not a calling to give care necessarily, and they're willing to strike more strongly. So I don't know. It's. I wanted to bring it up because I think our listeners are the people that are going to have to figure this out, but I don't know that it's figured out right now.
No, I don't think that it is. All right, let's shift to AI. We've got two different stories here. One is about the healthcare industry getting much more mature in terms of its AI integrations, I would say, and then we'll go to a general AI story. So let's start with Epic rolling out AI charting as the scribe market heats up, right? So, Vic, we have been covering the scribe market, I think, since it really got going and when the dollar started flowing into it. And I think we said this very thing, right? I think we said this exact thing was going to happen, which is Epic is going to watch the demand. They're going to watch all the partners who integrate with their system. They're going to track all that data. And then they're going to roll out their own tool. And summarily, the CFOs are going to fire the scribe vendors who they hired prior to Epic having their own tool, and they're going to port over to Epic's tool. And I've played a little bit into the future because this story is solely about Epic rolling out AI charting. Mm-hmm. But I think there's no question that is the next step. You and I have talked to enough healthcare execs to know that if they are an Epic house and they are bought into the Epic way, and you are a vendor who is unfortunate enough to be on Epic's roadmap, once Epic rolls out your feature, you are toast.
Yeah, no question. We knew this was going to be coming. It is their pattern of behavior, and there's no reason that they wouldn't continue it with AI tools. And so the other thing that I think you're right about is that the Epic charting tool can be not as good by a decent amount. 20% yes. Not as good, 30% not as good, and they will still sell at a faster pace because of the integration, because of the single vendor, just the acceptedness of it. Never mind, they can cut all kinds of side deals and bundle things together. So it's very damaging for the scribe space, and they'll keep, I think, picking off as they see whatever the adoption threshold is. Maybe it's 50% of their customers using scribe technology. They then roll out a product, and then when the next thing comes up, maybe it's something around care pathways or something. When they see it get a lot of traction, they'll do their own version. That's just how Epic behaves.
That's right. That's just how they behave. That's exactly right. Okay, and the second one is that Optum is rolling out 2 new AI-powered tools for digital prior authorization. My view on this is, these tools have been developed and utilized inside United Healthcare and inside of Optum, for years, right? United Health Group has one of the deepest benches of tech talent in the entire healthcare industry for an organization that doesn't sell health tech. And I think these are things that they've been leveraging themselves, and they're now rolling them out, and very, very quickly. One of the products is Digital Auth Complete. It's already, connected with more than 250 payer systems to identify orders. And they're going to be rolling it out on both the provider and the payer side, right? Because Optum serves both markets. So to me, this is kind of a perfect example of how the UHG business model works, right? Develop these things, perfect them internally, and then leverage Optum to scale them across the industry.
Yeah, and it's the other, so revenue cycle, which prior auth is sort of a piece of, but a pretty significant piece of. That is the other place that has gotten significant AI adoption, and I think we're now seeing that the big incumbent Optum is now rolling out their own brand. And so, as a venture capitalist, I watch these things just to be cautious about. I want to invest on the front edge of the sort of adoption and get out, sell, or do something to get out quickly. Because once it gets to where everyone is doing it, the big incumbents roll it up.
That's exactly right. All right. So, final story of the show is Claudebot. Oh, no, they got sent a cease and desist. So it's actually Moltbot, or maybe it's OpenClaw. I mean,
right.
I've never seen something change names so quickly, but basically this is the open source AI agent platform that has taken the AI internet, not the whole world, because many people don't even know what this thing is, but it has certainly taken the AI internet by storm. And it's being heralded as kind of like the first AI agent that actually is autonomous and works. And because it's free, many people quickly installed it and started running it. It started a frenzy of sales of Mac Minis. People were sort of buying Mac Minis as an appliance to run their, we'll just call it OpenClaw because that's what it is now, to run their OpenClaws. People are standing up cloud instances to run their OpenClaws. But I think the derivative that came out of all this OpenClaw frenzy was a social network generated by and for these AI agents called Moltbook, where all these AI agents are having conversations with each other. It has been an incredible view into what the future could look like, right? We're going to talk about whether or not it's real or not, but it's been an incredible view into the idea that swarms of AI agents can autonomously create an environment where they are all talking to each other, building community, and working independently and collaboratively for or against or alongside humanity, right? And the speed with which they stood this thing up and have had these conversations and have tens of thousands of members in the community is pretty stunning, pretty shocking. Now, two things I want to bring up. One, I think both you and I have not yet installed OpenClaw because we run a venture firm. It is reasonably regulated. We have lots of compliance stuff. And putting this open source thing on our machines that has access to our machines is just not advisable. And so neither you or I think this is correct, have run an OpenClaw.
That's right.
And then the second thing, maybe that's part A. Part B related to that is there have been some really scary security things related to this OpenClaw thing. I think there's such a frenzy around AI that people are just like grabbing this stuff and running it and having fun and not thinking about the implications and the downsides of it. So that's a whole other thing that we need to dig into. The final bit is it's unclear how much of this is autonomous and how much of this is humans prompting the AI to contribute to this Moltbook, which is kind of like a Reddit forum. And so it's hard to tell just how autonomous it is versus it's humans just messing with other humans, right? And it's like, one thing I'll just say is Balaji Srinivasan had a post on X where he said, look, we already have all sorts of AIs that are running autonomous accounts on X today. I mean, that's not a new thing. And yes, they're quote unquote communicating with each other, but they've largely been driven by humans who are doing the prompting. Right. And if you go on X, one of the biggest challenges I've had lately on X is this whole thing called shit posting, right? Which is basically where people are taking serious matters and they're applying satire to it. And you kind of can't tell if
Right.
they're serious or not until you get into the comments and you read in and someone's like, this isn't real. And then the author of the post says, of course it's not. Why would you believe me? But like there's so much of this shit posting happening on X that like you can see how Moltbook could just be what's already happening on X, but with a hyper focus on AI agents, right? So I guess that's a lot. And I'll turn it over to you for your take on it. But it certainly has been a phenomenal thing to watch happen over the course of the last 2-3 weeks.
Yeah, no question. I mean, I think there's a real challenge if you want to be plugged in and understand how to use these tools. I mean, even just not forget OpenClaw, just Claude, Gemini, ChatGPT, really effectively. You need to be using them every day and really like in the middle of trying things. And yet you also have to have enough understanding of security to know where the line should be. So for me, the line is I will not allow something that isn't me to have my credentials. Period.
Right.
So I'm very comfortable playing with, and I think of it as playing or researching, but it is, I'm curious enough to find it enjoyable, playing with Manus. Manus is an autonomous agent, and I ask it to do something. So this morning, I asked it to come up with a list of the 50 best seed investors in healthcare, because a lot of the Jumpstart Foundry companies need funding. We know a lot of seed investors, but I wanted to gather a list. And then I left and came back 2 hours later and has an Excel spreadsheet with all the investors, their email address, what they're invested in. It's great for that. And it would have taken me, several hours to put that together. It's not good at some other things. And so I've been like playing with it and testing it. And now I know when it's useful. But Manus does not have my passwords or a credit card or an ability to sort of send an email on my behalf. And so I think it is difficult for the general population to know, okay, I want to test this and learn because the technology is changing so quickly. If I don't have my hands in it, I'm not going to understand it. I think that's true. But then you also have to, it's almost like a spidey sense or something. Like when it's asking me to, I know someone that put their like password, 1Password main thing into Moltbook.
Oh.
So it had every password, and they do not understand the risk. They just don't understand the risk. And it's significant. And so that balance of like where you should be testing, I think a lot of people don't go far enough. They're just using the AIs as a chatbot, and they'll put one question in, they get a response back, whether it's good or bad, they finish. And I think there's a lot of different ways you could use LLMs that are not that. But you also want to be cautious, and there should be some kind of red line. For me, it's passwords and credit cards that I don't want to give control to. I think that's a pretty liberal line, but there's thousands of people that went off and signed up for Moltbook, now OpenClaw, and there's just an entity out there doing stuff for you. And in the story you have pulled up right now, someone figured out how to go look at all of the backend server in a way that I don't know how to do, but doesn't seem very hard. Several people have done it and posted. All the information, all your personal private information is on there. So you know this space better. So maybe tell about what the vulnerability is in this, what we're looking at right now.
Yeah, look, you make an incredibly important point, which is it's very hard to know the reality of what these things can do if you're not playing with them, right? And I definitely have felt behind because I haven't had the time to create, a distinctly segregated, controlled environment where I can install OpenClaw and feel comfortable that it will not, that the upside is properly weighed against the downside, right? Yeah. I, like you, I'm just simply not willing to do anything overly intense, right? With these technologies. Why would I, right? We have Anthropic, we have Gemini, right? We have these enterprise ready tools that will comply with our policies and all these other types of things, right? And so on one hand, I want to be a fast follower, but also we're in early stage investing. And, one of the most dramatic things that's happening, maybe to kind of revert back to the first set of stories about the tech stock, drop, is that AI is flattening our industry, right? And it's transforming our industry. And it's really important for you and I to understand how can early stage companies leverage these tools to be more capital efficient and more productive, right? It's so important. We have to know it so we can talk to our founders about it. A lot of times they don't have the time to research this stuff the way that you and I have time to research it. But we have to balance that against the security risks, right? And the downside of some of these tools. And I just haven't been able to find the time to get comfortable with setting up, an OpenClaw. Also, today, Opus 4.6 came out. And, I think the rate of change is so fast that on one hand, I'm like, man, I wish I knew what this Moltbot thing was doing. And on the other hand, I kind of feel like by the end of February, Anthropic's going to roll out an equivalent capability. I mean, Codex, OpenAI rolled out Codex, and it's kind of like a parallel agent app, right? Yeah. That is being positioned around writing code. But as we know with Claude Code, they're not limited to being able to do code. They can do many other things. And so we're just in this super interesting time where it's hard to tell what's real and what's fake. The capabilities buried in the word agent are morphing and changing and evolving in real time. And agent doesn't mean just one thing, right? It can mean many, many things depending on who you're buying it from and all these other kind of things. And at the same time, the capabilities that AI is going to enable every single individual in a very short period of time is completely destructive to the current economic model that we have, right? In terms of how we previously needed to pay people to be analysts or consultants or marketers or executive assistants or travel agents or, all these services that humans were doing before. We are so close to AI being able to do that for every single individual.
Yeah, no question. And we need to keep at the edge, but at the same time, I don't feel like, and I'm using these tools a lot, I don't think I'm fully utilizing the capabilities that I have right now.
Agree.
I have used 3 tools a lot, Claude, Gemini, and Manus, and they're kind of different. I don't know if you're played with the Claude inside Excel, but I started working on that this week, and it is phenomenal. I mean, it's it's really ridiculous. Good. And we use a lot of Excel in our business. And it's a way that you have to change the way you think about the work. Like, how should we approach doing a model for a company that we're invested in? It's a different way today than it was a week ago because Claude is living inside Excel, and Claude is much better at Excel macros and things than I am. So there's capabilities that I need to utilize and build new work streams, and I have to create context files that would sort of get Claude to do Excel the way I want it to be done. That takes a lot of effort, but there's a lot of benefit from it. And then there's these new things that are coming out every day. Every day. And I think just people need to be cautious because, the world's full of people that will steal your money if you're willing to give them your credit card and just say, please don't use this.
Agreed.
So it's kind of both end, I think.
Yeah. So, who knows what we're going to see next week. I'm looking forward to playing with Opus 4.6. They're talking about the next version of Sonic coming out. They're talking about the cost dropping. They're talking about these things blowing away the benchmarks on the previous versions. It's just, it's a constant thing. And maybe one of the key takeaways is the importance of revisiting our time budget, right? Like they're kind of, the trade-off is AI will make you more productive, but you can't rest on what you know about AI today. And so it's almost like every week you've got to have a couple of hours dedicated to keeping up with the rate of change in AI, and you will be rewarded with continued multiples on your productivity on a week over week basis.
Yeah, that's right. So, I mean, I'm thinking a lot about so the big issue with AI for most people and for me is it doesn't have a memory. So like every time you turn Claude or Gemini or any of them on, it's the first time you've ever talked to them. So if you think about like interacting with a coworker, they remember what we talked about yesterday. The LLM does not do that. So at least for me, to get productive long-term work, I needed to create a structure to hold what has happened so that I can then tell the LLM, well, read this document to get up to speed. And then, because it will read a 10-page document summarizing the work they've done over the last 3 days. And then in 10 seconds, it's read that and it's up to speed and ready to go. But building that content so that it is accurate and up to date in a way that doesn't suck all of the time. There's the whole thing around that. That's what I mean, like trying to figure out how to utilize these tools. They're very powerful, but if you have a powerful tool and you don't put it in the right direction, it just goes off aggressively in the wrong direction. It doesn't really help that much.
Yeah, I think you're exactly right. That precision and being abundantly clear and helpful in context is a real point of leverage with these apps. And look, memory is getting better every week too, right? I mean, it's getting measurably better every week. Now, it may not be perfect to where we want it, but OpenAI and Claude, they do have memory. Like, you can bring things up, and it's starting to kind of build its own set of context around us individually. But you're right. All that does is set a new floor, and then your expectations are looking for something better, and you realize it's the memory is still not perfect. You're absolutely right about that. And an investment in learning the newest capabilities, trying the newest models, as well as building out your context base is part of the game going forward.
Yeah.
There's no question about that.
Yeah, and I think a lot of times in human cultures, like a work culture, a lot of things are assumed, right? So go do this project. The person kind of can make assumptions based on what they have worked with me before. They kind of know like what level of detail I want, or they might be a back and forth if they're confused, might ask me a question. LLMs are designed to predict the next token. So they're very good at sort of just guessing what you might want and throwing something out there. If you're not crystal clear about what it is, and often that's because I haven't, in fact, mapped out in detail what I expect from this. I've just always told a coworker, hey, do a reference check on this person. And they kind of know what that means. But the LLM doesn't know what that means, and it guesses. And then half the time it's right, but half the time it's not right. And that's not a high enough percentage. And so I need to figure out, okay, what do I mean by check a reference and write that down? And it turns out that's pretty hard, or that's at least time involved to doing that.
Agree. All right, man. Great show. Next week I should be back in Nashville, so it'll be fun to do one in person.
Okay.
See you then.
Safe.